Everyone. Many of our clients have been reaching out over the past few weeks to the Grabill financial team. And what I hear from most of those conversations is, Chris, I really just wanted your reassurance. Or maybe, please tell me I can recover from this. If any of these thoughts have been going through your mind, you're like many people right now. As a matter of fact, I think there's many professionals who are getting a little nervous in times like these. As I've said before, fear and nervousness are perfectly normal reactions, and I suffer from them myself sometimes. It's kind of strange to me that the biggest problem right now seems to be that the economy remains relatively strong, and thus it's been very difficult for the Federal Reserve to get inflation back under control. I remain of the opinion that inflation likely peaked in the middle of the summer, but it remains very stubbornly high. The bright spot in this news is that most people remain employed, if they want to be, and jobs are still pretty plentiful. It's hard for me to become too negative when most everyone I know has a job right now and can generally afford the things that they want and need. That's not a reason to jump up and down with excitement, but it is a reason for reassurance and hope. I'm going to leave you with one statistic today that I think really addresses the resiliency of our markets here in the United States. All of us remember the great financial crisis of 2008, but most of us have forgotten the numbers that were associated with it. When the Dow Jones Industrials peaked in October of 2007, that index was at a level of 14,164. At the depths of the crisis, it had fallen a breathtaking 54% from that level and was trading at 6,469 points. That loss shook professional and amateur, Joe investor, everyone alike. But it also created one of the best opportunities in generations to invest. Fast forward 3 weeks from when the market bottomed in early March of 2009, and the market had already gained 20% over that 3 weeks from the low, and generally continued higher over the ensuing years. Looking at my screen today, October 13th of 2022, even after the start to the year that we've had in the markets, the Dow Jones currently sits at about 30,000 points. So, had you chosen to make an investment into something that could imitate the Dow on the worst possible day when it peaked in 2007, you would have still nearly doubled your money and then some since that time. Had you been brave, and let's face it, maybe a little crazy, and invested when the market bottomed in March of 2009, you would have seen a pretty amazing level of return over those same years. Now, none of us is smart enough to be able to time the tops of the market and the bottoms of the market. What I am telling you is that you do not need to be able to do that. What you do need to be able to do is to be disciplined in your investment approach. Work with your financial advisor to make sure that the level of risk and the potential rewards in your portfolio are in tune with your style and your personal goals. I appreciate your phone calls and truly look forward to our next conversation. Thank you so much for your business and your trust.